Well, I'm being joined now via telephone by the Director General of the Lagos Chamber of Commerce and Industry, Muda Yusuf. Good morning, Muda.
Good morning, Esther. How are you?
But I'm very well, thank you. Well, I would like to ask you if you're disappointed, but you probably were expecting it, as other analysts and economists were. But I was just listening to the central bank governor now, and he gave reasons why the MPC had to retain its tight monetary stance. He says basically that headwinds to the economy still remain. Inflation, there's still an inflationary threat. Talked about the fact that there's still insecurity in the north and that the food prices could continue to rise because there probably is still difficulty having those food items being brought down from the south, from the north down to the south. He also talked about some other issues of threats to the robust forex reserves, and of course talking about a possibility of lower outputs from the oil side of the market. Now, what is your reaction to this?
Well, naturally, we are not quite happy with the outcome of the meeting, although we are not surprised. But just as we have always said, the issues of credit is no less important than the issues of the other variables, other economic variables like exchange rates, like growth, like foreign reserves, and so on. Especially at a time like this, when we have so much unemployment. Youth unemployment is now, I think, in the threshold of about 50%. Many enterprises are not operating optimally. Obviously, not only because of financial constraints. I admit that there are other constraints, infrastructure, policy, and so on. But those elements of the variables that impact on the business environment that we can at least manipulate to improve on the situation, I think we should do. Now, as we speak, there is no way you could do profitable business in the property sector with the kind of financing that we have in the economy today, either in terms of the tenor or in terms of cost. There is no way you can finance manufacturing, particularly, investments in capital equipment and so on, with the kind of cost that we have. Because interest rates, 25 to 30%, there is no way you can stimulate the economy. There is no way you can create sustainable jobs. That is why what we have in the economy are basically people who just concentrate on the short end of the economy, going to Asia to buy consumer products, sell and pay back the bank, or people who invest in treasury securities. There has been a lot of inflow of hot money. It has been acknowledged also by the CBN. People just coming to take advantage of the high interest environment that we have. With that business adding serious value to the economy. So our view is that we appreciate the fact that the CBN is concerned about stability of the macroeconomy, about exchange rate, about inflation. We appreciate all that. But we want to emphasize that the issue of credit is no less important. Because how else will enterprises get money? Unless you have access to government money. And how many people have access to that kind of money? The only way to go is the banks. And if you have interest rates running between 25 and 30%, then it's not helping the economy. And we need to get out of the kind of situation in which we are now. Definitely there will be trade-offs. There will be trade-offs in the area of inflation. There could be trade-offs in the area of exchange rate stability. But that is what economic management is all about. So I think we have to make a choice and get our priorities in terms of what exactly we want to achieve in this situation and what is more important. For me, what is more important now is to see how we stimulate the economy, improve liquidity, and let's get businesses to work. While we'll address other long-term issues of infrastructure and things like that. So that is my take on the outcome of the MPC meeting.
Okay, Muda, if the MPC, the Monetary Policy Committee, had decided to tinker with the rates, take it downwards in terms of basis points, how much of a cost would you have liked to see?
Well, what is important is the principle of easing the situation. You know, these things, apart from the absolute effect, it also have a signaling effect. I need to show the direction in which the economy is going, to show the direction in which the monetary policy is going. You know, rather than just get fixated on some of these other variables. I may not want to mention specific figures, but we have to accept the principle of easing the monetary stance, of softening on the tightening. That is the point we are making. At least these things have to, of course, have to be gradual. We don't want to do something that will destabilize the entire macroeconomic environment. But we must begin to take steps to improve on the need, on our desire for growth, on our desire to stimulate investment, particularly at the small and medium enterprise level. Because the situation is quite bad. The other time, one of my members was telling me about how he was being asked by a bank to pay 30% for an agricultural venture, agricultural investment, working capital. 30%. You know, even with that, after scaling all the issues of collateral up till now, he has not been able to even get even at that high cost. Meanwhile, all the capital assets are lying idle. You know? So it's quite a serious problem, and I only wish that the monetary authorities also appreciate how serious the situation is.
Thank you, Muda Yusuf. We do appreciate you talking to us too. Some very valid points you made there. Thank you so much for
thank you very much.
Thank you so much. I've been talking to the Director General of the Lagos Chamber of Commerce and Industry, Muda Yusuf, sharing his thoughts on the latest decision of Nigeria's Monetary Policy Committee yesterday in Abuja, where they decided once again to keep monetary policy unchanged at 12% for the 10th consecutive meeting. But that's still